Before, I would say 2-3 years ago, whenever I would hit stop loss on a trade and I had a series of losing trades, I would feel very bad. I would feel like, do I even know how to trade? You haven't lost all your money. Your money is just in the market. You've got to get it back without revenge trading.
The data in trading is skewed because somebody can deposit $100 and not care about it, so they just gamble it away, lose it in 2 days. That's in the data set. You also have people that are just started trading yesterday. That's in the data set. You'll always be able to make money, but right now prop firms are good. Prop firms are easier, the easiest as they've ever been. Go for the reliable ones, make as much money as you can.
Someone of authority, I believe, will make a way to make it work, but they won't allow everybody to have a slice of the pie.
What is your trading routine?
First things first, it depends what day it is. If it's a Sunday, I usually have a Sunday market breakdown Zoom call that I do. So I will get my forecast for the entire week. However, throughout the day, when I have my, variables that could take place for each day, depending on what the daily is showing in terms of data, I may have different biases. I may have a bias of counter trend for Monday. I may have a bias of pro trend for Tuesday. I may have just an internal bias for Wednesday, and Thursday, Friday might be a no trading day. It depends, I would say. But when it comes to my actual trading routine, it mostly happens on a Sunday. Sunday is mostly the day where I forecast what my outlook is for the entire week on pairs like GU, EU, gold, US 30. And to be honest, yeah, I'll take each day as it comes. Monday, Tuesday, Wednesday, Thursday, Friday. I'll take a look at what price action is saying on a lower time frame. Are we tapping into any sort of higher time frame, significant zones where I believe a significant reaction will take place from, where I can sort of capitalize on my lower time frame executions for a higher time frame type of profit taking system, meaning can I maximize this trade as much as possible on a lower time frame based off of a higher time frame confirmation. So it's not just merely executing on lower time frames and that's it, just taking profit at M1 liquidity levels. I'll execute on the M1 2-minute, 3-minute, 5-minute, 4-minute, whatever it may be, with the understanding of the higher time frame in mind, just to know, not because I'm giving it importance in terms of, okay, I'm executing a lower time frame, but am I in this for a swing? No, I'm not in it for a swing. I just want to know, because the last thing I want to do is have my markings wrong and get stopped out based off of a high time frame zone I ignored that was maybe 5 pips above my initial lower time frame zone. So that's mainly what it is for me. It's just about marking, deleting zones, refining, asking myself, does this zone look too easy? Is this a zone where new or even novice traders that think they're trading the Holy Grail would enter from and then be induced? Is these series of questions that I ask myself, and people that have seen me trade before on live Zoom calls will tell you sometimes I mark out 3-4 zones. I'm like, yes, this looks good. Then I might see one thing that just puts me off and I delete all zones and I'm left with 2. Yeah, to answer your question, my trading routine, my markings usually take place on a Sunday, but I take price action day by day as it comes, and that will allow me to shift whether I'm bullish for the day or bearish for tomorrow, so on and so forth.
So top-down analysis is the most common thing. People say start on the daily and work your way down, daily down to M5, M1. And what usually happens is you market everything you know. So the problem becomes then is if you have all of your supply zones on the daily, then all the supply zones on M4, M5, all of these lines, you have Asia high, Asia low, previous week high, previous week low. So yeah, when you have so many lines on the chart and you have all these valid zones, all these POIs, all these liquidity pools, all these things you can trade, it can be very disorientating. So more important than all these levels and zones is knowing context. So I'm not a huge fan of top-down analysis, because let's say you mark out a daily POI, but you know that supply zone might take 3 weeks to get there. What's the point of marking it out? So rather I come and say what's relevant for today. So I'll just look at my nearest supply zone, nearest demand area, and then nearest liquidity pools. So I've just taken 50 lines just down to 2 or 3 relevant zones, and then I'm just seeing the initial reactions. So the initial reaction, I need to see what did Asia do. Asia range is usually a liquidity pool, usually a consolidating area for the currency pairs I trade. But then it also aligns a trap. So let's say Asia range is showing me a bullish trend line. That's inviting buyers to get in for London Open. You usually see that gets induced out. So I'm looking for those traps and narratives being built before the session. And then as the session open, how does it interact with the zones I have to then form a bias? And that process usually supersedes market structure, because market structure might say bullish, but then if I see the traps are getting induced to the bearish side, then I know I should be looking in the other way, not necessarily because of points of interest. How do you handle emotions within your trading, specifically greed and fear?
It's very cliche to say, but when it comes to emotions, I feel like I've kind of surpassed the major feeling of emotions whenever I'm trading in the markets. For example, before, I would say 2-3 years ago, whenever I would hit stop loss on a trade and I had a series of losing trades, I would feel very bad. I would feel like, do I even know how to trade? It would genuinely impact my day. Like, I would go about my day and that would be at the forefront of my mind. Oh, my days, today can't be a good day because I took a loss trading. And I feel like as I've gotten more and more experience, of course, I'm still 4 years in, there's a lot more experience to have. But with the very, very small experience that I have right now, I've become fearless. And I've genuinely become numb to losses because I've taken so many. So it's got to a stage where, you know, a soldier walking out of a battlefield with so many spikes in their back, what more can you do to this guy, you know? And I genuinely feel like I've been through that in terms of losses, the days where there was no risk management. And I've seen what it looks like to have crazy figures in drawdown, and the days of flipping, and I've seen what it's like to be 16, 17K in drawdown, 25K in drawdown, trying to do a flip. So I feel like because I've seen the depth of drawdown, the depth of losses, the depth of understanding that you won't get rich quick, the depth of all these complexities that come with trying to make it quickly in trading, because I've seen that in my first year and in my second year, I feel like now it's just made me a very, very numb trader. Now, of course, this is not me saying I don't feel any emotions if I've taken a loss or series of losses. No, I feel something. I'm like, damn, man. But then I go back to remember, I'm a fisherman. The fisherman does not buy a fishing rod to sit by the lake, to sit by the river and have zero belief in his ability of catching fish. I know I'm a trader. I've been trading. I've put in the work. I know I can catch trades. Right now, there's just no fish. Or if there is fish, I just haven't been able to catch them today. Today they slipped away. Tomorrow I'll be back at that same river, at that same time, with my fishing rod, waiting for my same setup to occur, and it'll play out.
When it comes to trading emotions, I'm a firm believer of you don't necessarily have to address it directly. A lot of people get into these escapisms of, let me go to the gym, let me punch it out on a punch bag, let me do a cold shower, and all these kind of journal my thoughts away. The reality is, I like the saying of every trait you desire is on the other side of going through it. So if you want to be someone that has a high stress tolerance, you have to go through a lot of stressful times. If you want to be someone that can be stoic in emotional moments, you got to go through a lot of emotional moments. So I think the same goes for trading, where we can address all these emotions by textbooks and practicing and all these things. But the reality is, if you just think of it like another day in the office, if you've got 5 years, 10 years under your belt, you get accustomed to it, you get acclimatized to it, and then you embody that trait over time by going through it. So I think it's a very nice way to think of it. If you want to be able to take losses and not feel it, just take more losses, and losses will come. It's a guarantee within the game. And as you take more and more losses, as the years go by, you will naturally develop the skill of taking a loss, feeling fear, feeling greed, and not letting it affect the rest of your day, not letting it affect your next trading decision. A nice saying is the idea of not carrying the weight on your shoulder. So yeah, there was an interesting analogy where it was two monks, and these two monks gave a vow to each other that they'll never touch a woman for the rest of their life. So these monks are going through their life, and there was a storm, and the river had overflown. So the bridge broke. So then everybody was trying to cross this river, and there was two women that needed help to cross the river. So despite the vow, one of the monks helped the women cross the river. They carried it on their shoulder. And then the other monk was so blown away. He was like, how could you help that woman cross the river? We made a vow to each other. And then they carried on. They carried on their journey, and they were in silence. And then 3-4 hours later, the monk that actually helped the woman cross the river, he said, I see you're still bothered. I see you're still irritated. He was like, yeah, because we had a vow. You broke the vow. How could you? And he was like, look, I left that woman at the end of the riverbed. You're still carrying her right now. The message in there is that when you take a loss, when you go through something, you should be quick to dismiss it. You should be quick to let go of that burden and not continue to carry it. So when it comes to a trading loss, everyone will still feel it, and you can get more acclimatized to the feeling, but you also got to be quick to refresh. So when the next opportunity comes, stick with your goals, be realistic with what you can achieve in your trading, maybe 2%, 5% a month. I know I've seen you do bigger months, I've seen you do small months. So with that mix in mind, what is your belief on this idea of realistic goals?
I simply believe take what the market gives you and don't be scared of what the market gives you. Meaning, realistic goals varies for every single individual. For me, my realistic goal 2 years ago is not the same as a realistic goal right now. When it comes to realistic goals, if someone has never seen a huge amount from trading. I say this time and time again, I'm a huge advocate for it. I don't care if you trade ICT, ABC, EFG, whatever you trade. If you have never seen 5K in your life and you're up 5K on a trade and you don't close that, but you say to yourself, no, I'm not closing because I'm waiting for this fair value gap to be filled, fill the fair value gap in your bank account first, because you've never been paid. You've never seen this profit. You've never ever tasted what it feels like to have realized gains. You're here to take screenshots, not to take profits. You're here to live by the cheers. If you live for the cheers, what do they say? You're gonna die by the booze, right? So you're here taking screenshots of trades that haven't even hit take profit. But maybe you're in a Discord community and you want people to cheer you on, so on and so forth. Yeah, man, well done. Elite trader, beautiful entry, sniper entry. But there's nothing sniper going on in your bank account. When it comes to realistic profits, first of all, let's establish the person who's never seen any sort of profit, your realistic profit should be the significant amount of blues that you see. Just to pay yourself first. Tell yourself, okay, this is real. This money has landed in my bank account. I've paid myself. Maybe don't go the full volume of technical analysis and say, okay, price is 15 pips away from TP. Price is only a 3R away from TP. Take your profit, pay yourself, let it land in your bank account. And then for the next few trades, after you know you're good, after you know you've got some savings there, meaning this one significant amount that you've never seen before is sufficient for you to focus for the next month, take a few losses and you built yourself a buffer, no problem. The next one, fill the fair value gap, go for those equal highs, let it run. Whatever you want to do, go ahead. I'm not against you for that. So when it comes to realistic goals, my realistic goals 2 years ago are not the same as my realistic goals right now. Maybe it sounds ungrateful to say, but I'm always grateful for my profits. But if I see 10K right now, it doesn't excite me. Whereas if I was to see 10K 2 years ago on a single trade, it excites me. Today, as we spoke about just in the morning when I was up trading in the same house, I was up 16K in Euro USD sales, price came, hit my stop loss. Back then, if I saw 16K, I'm closing that. But realistic goals, it varies for everyone, because my idea of realistic goals right now is you can genuinely make some ridiculous figures in the Forex market. Life-changing. I'm talking monthly, by the way, because I've seen it myself. By the time this is out, you'll see a video on my YouTube of my TradeZilla showing how I made $197,000 in 11 days, 11 trading days. Where can you go and make this? So in terms of realistic profits, of course, that's not a realistic month every time. That was just a great run that I had, okay? But in terms of realistic profits, everyone's idea of realistic profits has a cap. And I believe the cap that it has is dependent on how many years of experience they have. For example, if I say to a trader that's been trading for 6 months, what's your idea of realistic profits? They'll probably say something like, yeah, man, 2% on my funded account, because they don't know nothing beyond the funded account, or they haven't seen anything beyond 2, 3, 4, 5%. But if I ask someone who's been trading for 2 years, because they would have had their fair share of experience in the markets, they'll tell you, okay, yeah, my idea of realistic gains is probably 10K a month. That's realistic in their eyes, because they know what they need to do to get there. Have a large account and make sure the percentage gain is adding up, so on and so forth. Make sure you're managing correctly and making sure you're increasing correctly also. So when it comes to the question of realistic gains or realistic amounts, it varies. Each person, the person who has longer experience, and also some people say professional traders don't make that much. The correct way to risk is this much, because when they see these series of new TikTok traders being born, or these new social media traders being born, it pushes the narrative of make ridiculous gains, which I don't blame them for, having their opinions on these people that are, dreaming recklessly. But it is possible. Like, don't bash it, because it is possible. I'm saying I made $197,000 in 11 days. I'm not saying I'm going to do that every month. Do you see? But the possibility is there. You can't deny the possibility. So when it comes to appetite, what was the question? When it comes to risk?
Realistic, what's achievable?
Yeah, when it comes to what's achievable, sky is beyond the limit. Sky is beyond the limit, honestly.
So when it comes to short-term versus long-term, I think that's the only way to look at it. And the analogy I can give is price action. If you look at a bullish impulse on the daily time frame, it will just look like a straight line. Then you go around to the 4 hour, you'll see the price action. And then within that 4 hour push, you zoom in again. On M1, you'll see all the price action. I think the same goes for what's realistic in the markets, in the sense of you might have a short run that was really, really good. You might have a short period that was really, really bad. But when you zoom out, give it a 5-year thing, things will always go towards what your data is. Things will always smoothen out. So even if you're going through a huge winning period, when you zoom out, that would be a small blip in your overall equity curve. So I think in that sense, realistic is what your data is, realistic is what your plan is, realistic is what your risk reward system, the KPIs that you need to factor for, which is win rate, risk reward, rate of return. All of these things, long term will be your truth. And whatever happens in the short term, don't be too disheartened by it, but don't also be too arrogant from it, because these are all short term movements. Obviously, you made a lot of money in the Forex markets, but what is your long term goal within the markets?
My long term goal is actually to be a position trader. When I have a few more M's liquid in my trading account. I don't like the idea of having to find setups every single day, so on and so forth. I've got other opportunities that are greater than what I've got going on with my trading or Yarimi University, to be honest with you. Companies I'm trying to build that I genuinely believe will scale to ridiculous amounts. So I don't want to have to deal with the stress of day trading. I'd rather just, even on a swing perspective, I'd rather just become a swing trader eventually and then branch out to be a position trader when I have that sort of capital where, you know, I don't even have to look at my trading profits because my XYZ businesses are generating me X amount monthly that I'm absolutely content and happy with, and I'm able to grow companies with the intention of having an 8-figure exit where I don't have to worry about money again, you know? So when it comes to trading, I would say that's my plan. Yeah.
Yeah. So when it comes to trading, there's obviously a lot to achieve. The sky can be the limit, but there's also bottlenecks. For example, how much capital you have, how much you trust a broker, and it's very rare to see someone in a retail broker on a retail perspective having $1 billion trading account. So it's also not accurate to say the sky is the full limit. I think there's a great opportunity for a specific window, and I'd say if your net worth is 0, 0, 0, and you got debt or these kind of things, maybe trading isn't for you. You've got too many financial anchors and you're going to be in a rush to make money. So I'd say there's nothing wrong with getting a job. There's nothing wrong with just doing a simple cash flow business. But then when you have a bit of savings, let's say you got 10K in the bank account, you're not urgent to pay your bills. Trading is a great opportunity because then you have prop firms and so forth. But then there's other seasons after that. So I think trading is a great way to make 5 mil, 10 mil, 15 mil, but it's very rare to see someone that's done 50 mil plus. But it's very common to see someone that's done 50, 100, 500 million from a business, from a cash flow business. It's very normal to see people scale a business to 500 to a billion and exit. So I think those are the later on ships. And I think trading is a great stepping stone or a vehicle to get me to that position where I can have the liquidity to leverage tech, to leverage brand, to leverage media, all these other things that I wouldn't have in my season one and I don't fully have right now. But trading will get me there. As a trader that's been in the markets for 4+ years and obviously watched probably hundreds or probably thousands of candles, do you still backtest?
To be honest with you, no. I more so whenever I have a losing streak, it depends how bad the losing streak is. What I tend to do is I tend to forward test for that week. I won't place a live trade for that week, for example. You know, I'll just forward test because let's be honest, if I was to give an example of footballers, right? Footballers have several training sessions within the week. They might have a mobility class, they might have a push day, pull day, they might have a endurance day, cardio day, and they might have a day for actually playing with the football and training. They might also have penalty practice if you're a striker, so on and so forth, okay? And when the footballer's on a training ground and he practices those penalties or he practices those free kicks, it builds his confidence to now do it on the big stage, which is why you see players at the top level performing, let's say, for example, on a Champions League night. They might score a goal, or someone might, on the opposing end, miss a very crucial penalty that would have taken his team to the next round. But psychologically, that's now eating him up. So what's he now got to do? He's now got to go back to training. And even though the technique might not have been the issue, it's just the psychology part of it. Big stage, it's the last penalty kick. Your team is counting on you. The fact that he missed that penalty urges him to now go back to the training ground and practice, even though it might not be the technical issue. It's just muscle memory. You have to go back to training. You must go back to training. You must keep repeating. There has to be a series of repetition with these specific type of penalty kicks that you take. You know, you have to know what part of your foot to hit the ball with, what kind of follow through you're gonna have whilst you're kicking the ball, so on and so forth, so that when you're on that big stage again, you've practiced it a million times. And as they say, repetition is the mother of all skills. So in my scenario, I don't back test anymore. Instead, I forward test because I genuinely believe back testing is good for when someone is a new trader and they're trying to learn their strategy properly, okay? They want to learn the strategy properly. But the problem I have with back testing sometimes, people don't back test accurately. That's why one of my famous quotes in my Zoom calls that my students always recite is I say, back test like you trade and trade like you back test. If this is how you back test, I don't have any problem with it. I would even do it myself. But the issue is when people are back testing, they're not back testing how they trade. Meaning what? They're not waiting candle by candle, candle by candle. They might have the speed on 10x, click play, and then whenever they see 2 confirmation candles move in their direction, they act like they were going to enter, so they put a short position tool there or the long position tool there. Why are you lying to yourself? You're only hindering your own growth, you know? So the issue I have with people that backtest uselessly, not efficiently, is the fact that they don't backtest the same way that they actually trade, okay? They don't, mark out the timings that they trade and drop to whatever time frame that they trade on, they execute on. They don't wait candle for candle. They just click play. It's a bunch of squiggly candles happening in 10x speed. It's not realistic. That's why I'm more a fan of traders who actually backtest the way they trade or forward test, because when you're forward testing, you have to sit there and watch retracements. You have to watch your trade go from entry to 3R to back to 0.5R to -1R to +5R back to 2R. You have to watch the cycles of the markets play out. You have to watch, the markets trend. You have to watch the markets consolidate. You have to watch the markets retrace. It's a realistic approach to actually familiarizing yourself with what's going to come in the real markets. Whereas backtesting is simply just click play, watch a bunch of candles, wrong, right, don't worry, man. Next entry is going to be a sloppy one, just so I can have the satisfaction of saying I made back the last trade. It's not realistic. Unless you backtest like you trade and you trade like you backtest. What do I mean by trade like you backtest? Trade like you backtest, the same way you were diligent in marking out every single significant zone, asking yourself, yes, no, deleting that zone. Is it within my correct time window? Okay, yes, it is. Let's drop in time frames. Can I see any possible areas where there might be early sellers, early buyers? If you're backtesting like this, that's why I say backtest like you trade and trade like you backtest.
So then backtesting is a crucial element in a trader's career, but it's not an evergreen thing you have to do, in the sense of what is the objective you're trying to get out of your backtesting. Is it to familiarize yourself with the market? Okay, it's useful. Is it to build a strategy? Very useful. Is it to test a strategy? Very useful. And I think backtesting is going to be the majority of the time in the beginning of someone's trading career to create that strategy. But once you have a strategy, you've got the data, you've tested it's sufficient, then moving forward, you're checking when you take a loss, was this loss part of the plan? If so, then let it be. If this loss was based on my performance, based on my emotions, then I need to address that. Performance and adherence is different to backtesting. So I think as you've found a strategy and as you've tested it sufficiently, then it's just what's happening going forward. And I think in that sense, backtesting is not really needed because you got nothing to achieve from it. The same idea of like, okay, familiarize yourself more. The thing you were saying of the football player who is a great athlete, or let's say a tennis player, the top tennis players between them, they're all just as fit. They all have great technique. They all have everything on the same level. But why does those top players, those veterans usually come out on top? Because they've been through those challenging, stressful moments more than the newcomer, who might be younger, faster reactions and so forth. So being a veteran in the markets is the same thing. You need to have that experience and time in real life conditions with real life emotions, and backtesting won't simulate that. So once you've got your backtesting to build your strategy, test your strategy, curate a strategy, then it's just live market exposure. And the way I like to think of it is immersion therapy. You got to immerse yourself in price action. You got to immerse yourself in the markets. Immerse yourself in taking wins and taking them wrongly, taking profit too early or too late. Immerse yourself in taking losses and then making the wrong decision in the loss. And as time goes on, you will know what to do, because those moments where you did the wrong thing will shape that correct behavior long term. So that's what I've been doing for the last 5 years plus. I haven't backtested for a while, unless it's something I want to test out, something that I've noticed and want to add into my system. Maybe the modifications in my profit taking system, which I did 2 years ago, that was an idea I had, tried it out, liked it in the live market, so then went and backtested it extensively. When I saw that in the backtesting, this is actually way better, then I implemented it and made it a new norm in my trading conditions. But aside from that kind of odd thing I want to test, backtesting is not a regular occurrence month to month. How do you evaluate your trading performance? Obviously, losses are normal and that comes, but how do you know these losses that you may have taken on a losing period is part of the plan, factored in, therefore there's no change you should make, versus I've taken a few losses, but because I'm doing something wrong and therefore I need to change something? How do you determine the difference between those healthy losses and those unhealthy losses?
I feel like this is where journaling comes into play, and journaling is very, very, very important. Now, I don't mean journaling and saying to yourself, today I feel bad because I lost. No, I mean journaling in the sense of you document your trades and you can take a look at your equity curve. And similar to how the market moves in waves, higher highs, higher lows, lower highs, lower lows, as long as your trajectory for your growth as a trader is forming higher highs and higher lows in your equity curve, there's no problem. If I log into my back office or my TradeZilla journal, as long as I'm seeing, okay, there's a high, there's a low, there's a high, there's a higher low, there's a higher high, I don't have any problem with that. And then let's say we get a deep retracement that induces both lower highs and then no problem. I'm cool with that, no problem. But the moment it starts looking spiky like this and there's no actual direction, that's where I have a problem with myself. And I'll say to myself, hey, I need to reevaluate. What is it? Am I risking too much? Am I executing too many times in a day? Am I trading outside of my trading window? Has my approach changed in any regard? Let me be as intricate as possible. Let me find out why this is happening. So my take on it is, as long as you're making higher highs and higher lows on your equity curve, you're good to go. Enjoy your losses. And I feel like that will give you more confidence as well, to know that, okay, whenever I'm in a losing period, I do come out of it because I know what I'm doing. My edge is proven. I trade at the correct times every single day. My method is crystal clear. I don't deviate from it at any given point. So I'm going to come out of this because it's not me emotionally or trying to read some nonsense affirmations to myself saying I'm a great trader. My data actually shows I'm going to come out of this if I just keep doing the same thing.
So losses are obviously the only guarantee in the market, and losses are factored in any strategy. You know that. Okay, my win rate is 60%, so 4 in every 10 trades should be a loss. But let's say now it's an abnormal period, or maybe I've taken 5 losses in a row. That usually doesn't happen. Then there is something to address. So the overall process is you can be falsely believing that this is a losing period. That's not part of the plan, and then you change everything up, but it was just part of your data. You just had to see it through. So knowing how to recognize that is important. And the way I look at it is that I've had losing days, I've had losing weeks. Occasionally I might have a slightly negative month, but I don't think I've had a negative quarter in years. So sample size, how long am I judging my losses on? If it's just at the end of the week and I'm panicking, well, that's not the right behavior. Mm-hmm. So that's the duration is one, or sample size is one. The other thing is external things. What has changed? Like, am I traveling a lot more and therefore taking more losses? Maybe it's not the strategy. Maybe it's me, my performance. Is there certain external factors in my family life, personal life that is affecting things? Okay, that's something. Have I changed up my diet and then I don't have carbs? I don't know. Like, external factors will be influencing your trading performance, and that is more to address than a trading strategy. So I think sample size, external factors, and internal state is going to be leading the decision of, do I see through the losses, or do I now have to address something and actually change my strategy? Obviously, when, let's say, Donald Trump tweets or Elon Musk tweets, or these big figures tweets, and you do see influence in the market, what do you do to factor that in your own trading?
I'll be honest, I don't really pay much attention to that. Like, for example, when Donald Trump got shot, people were saying, yeah, gold is going to shoot up, gold's going to shoot up. And of course, like in scenarios like that, I'm an opportunist. I like to see where I can sort of capitalize on the market. So I did take a look at gold. I was in Miami actually, and I bought gold, and price ended up hitting TP for a ridiculous amount. But I don't really pay much attention to news events and ask myself, okay, this is happening, this is the macro behind it, how am I going to position myself to it? Because as you would know, technicals will always align with fundamentals. Fundamentals are only an excuse to drive price anyway to where it was initially going to go. So I don't really pay much attention to it, I'll be honest with you.
So when it comes to just overall fundamentals, I've spoken about it, but let's say these black swan events of Donald Trump got shot, or Elon Musk tweeted something crazy, or all these kind of things. Well, traders can also say like, oh, just disregard it, completely disregard it. But when you look back, so many things have happened that are black swan events. You had Brexit, you had COVID, you had all these this Japan situation that just happened. There's always something that's going to happen. So you can't disregard it, but it's also a case you can't do much about it. These are unpredictable, unforeseen events, and these are just the days you take a loss. You take the loss, you say, okay, this was that, and this happened. Maybe it turns into a win. You also don't react too much to it. So these are kind of cost of business. This is kind of the market, the industry that we're in. So we move on. We're quick to move on. But in general, utilizing fundamentals, I'm not a huge user of it because I'm day trading or intra-session trading. And changes in employment, changes in the economy in general, the health of an economy, that's more of a 6-month, 1 year, quarter kind of outline. I'm in and out on the same day. So these fundamental drivers, interest rates, are not going to be massively influencing my style of trading. And red folder news, the catalyst that moves price action a certain way during the day. And very often it's happened that I've taken a trade, landed in because I saw price action was showing sells. I'm in the sell, I'm break even. 2 hours later, news hits and it hits my TP. And I didn't even know there was a news event. Then I look back and think, oh, there was a news event, nice. Vice versa, I hit stop loss very quickly. Oh, there was a news event. I just stick to my technicals. Fundamentals help or hinder at times, but I think overall it's neutralized because I'm heavily dependent on my technicals. Obviously, there's a lot of traders that want to utilize AI and machine learning, and a lot of traders that use bots. A lot of people sell bots, and there's this whole stigma around it too. Are you a believer in automated trading, and have you used it yourself?
I think Nasai was enough. No. It can work for someone, but what are you trying to get out of it? Like, genuinely ask yourself, what is my goal? Because some people say, okay, if I deposit this much, how much am I going to make? Can I leave my job? It's not realistic, man. It's not realistic. Now, I'm not saying you won't have profitable months if you're lucky, making that plural by saying months. I'm not saying there won't be, positive months or a positive month or a positive week, or I'm not saying you won't be able to extract money out of it. That's certainly a possibility. But how long? How long for? I'm just not an advocate of it. If you do that, do your thing, each to their own. I'm just not an advocate for that, I'll be honest with you.
I can see why new traders fall into it, because it's like a earn while you learn kind of vibe, and effortless, kind of just put it in here and this bot will make me thousands of dollars. Well, the reality is it doesn't work like that, because these influencers that are pushing them, if they really had a bot that could consistently pull out even 5% a year, a fund would buy it for hundreds of millions of dollars. They wouldn't sell it for $500 to people online. And I can see why people fall into it, because they're trying to solve a money problem right now. And trading is a skill set that can free you. But this is kind of like the shiny object syndrome. You're just falling for the trap. And, if you want to have this passive income, this kind of security, there's ways that there are. You just buy property, you have rental coming in. Just invest in an index, invest in funds, Vanguard, these kind of things. They are professionals. They are regulated. They are going to give you that return in the safest way that they can be. But a random bot online by an influencer is not that way. Now you're probably thinking, okay, how can I afford a property? How can I afford this, that? Okay, then solve the money problem first, but remember what stage you're at. So I would love to, when I was 15, have a property, but life didn't align like that. So you build yourself up and, don't get caught up in it, because the more you rush it, the more you fall for these traps and marketing gimmicks, and the more you just end up resetting and taking longer. So rather just follow the process that everybody knows, which is cash flow, stability, build an account up, utilize prop firms. Once you have enough capital, invest in assets that can give you passive income. And that's the journey, wealth generation. But it's not a quick journey. And stop trying to skip to the end just because you see other people doing it, or just stop trying to get there as fast as you can through shortcuts, because these shortcuts are not real. You know that saying, that broker disclaimer of 90% of traders lose 90% of their capital in 90 days. What are your thoughts on that?
When it comes to traders losing 90% of their capital in their first 90 days of trading, so be it. But I feel like in this generation, with people trading funded accounts, that doesn't really apply here. It's more so, okay, how quickly can a person lose their funded account? But even then, if we were just to apply that narrative of 90% of traders will lose 90% of their capital in their first 90 days of trading, so what? So what? When you start a business, do you not pay business expenses? Do you not pay tax? Why is it now with trading, people use this headline to act as though, okay, in my first 90 days, I'm going to lose 90% of my capital. It's 90% of the capital you put in, not 90% of your net worth. So it's a hurdle. And once you overcome this hurdle, then hopefully, if you learnt the correct way and you're a serious individual and you have your rules in place, it should be a linear curve. A linear curve also has dips, retracements, right? Like we were speaking about before. So what if that's a narrative that's pushed out, that you're going to lose capital? Of course you will. You think you came into this industry that has, a pay beyond what you can fathom, and you're not going to endure some losses. You're not going to endure some pain of feeling what it's like to get something taken away from you. In this sense, what? Finances, money, okay? You don't think you are going to become liquidity. You don't think your stop loss is not going to be hit a consecutive number of times. You're paying your dues. Every time your stop loss gets hit, you're paying your dues. You're saying, okay, cool, this is it. I've turned up today, business expense. I've turned up, business expense. I'm learning. Here you go, markets. Money. Then you come back, and once you've shaped yourself into a serious enough of a trader, you will recoup that. One of my friends told me he received some advice. An advice he received when he consoled a person he was speaking to, and he told them, "Oh, I'm going for a losing streak, man. I've lost all my money." The guy turned around and said to him, "You haven't lost all your money. Your money is just in the market. You've got to get it back without revenge trading."
Yeah, so obviously that's the broker disclaimer, and they probably are enforced to put it there. But it's also misleading because people will be very fearful of it, or very like, "Oh no, that's terrible. Why should I get even started into trading?" We also got to look at the relevance of the data. And if you look at anything in life, to be honest, the data is probably like that in the case of how many people want to make it to the NBA, playing basketball in high school and don't make it to the NBA. How many people want to be a doctor, but their grades didn't allow them. Everything worthwhile in life is hard, and everything worthwhile in life has that small percentage of winners. The data in trading is skewed because somebody can deposit $100 and not care about it, so they just gamble it away, lose it in 2 days. That's in the data set. You also have people that are just started trading yesterday. That's in the data set. So if you were to filter the data and say, okay, how many traders actually lose if they've been trading sensibly with a good strategy for 5 years and then deposit? Probably not the same data. So I don't want people to just lose hope, because that's the disclaimer, but also be aware that you can end up in these bad habits of gambling away and just keep replenishing accounts with your own savings and burning your life savings. All of these things are normal, and everyone thinks they are different. Everyone thinks that that's the data, but that's not me. But the data exists, and we're all the same. We all have these same emotions. So if you're not careful, you can end up as part of that data set, but don't let it be enough to hinder you, because there's also a lot of traders making a lot of money for a long amount of time, and that should be something we should strive towards and follow the correct process. Everyone focuses on entry points, entry protocols, entry models, and all the types of ways that they are doing it. What are your thoughts on that importance? Is it overemphasized compared to, let's say, exit levels? Because people then just put random exit levels, emotionally get out. I just want to hear your thoughts on entries versus exits and how you weigh them.
When it comes to entries, I believe a million percent you should be extra strict. 1,000,000%. You must trade at the right times, realize where manipulation takes place in the market for your pair at least. Know, say for example, if you're a pip trader, understand your pair's daily pip range. If you're here aiming for 200 pips, 150 pips in one day on EU or GU, bro, what are you doing? I'm a huge advocate for being very strict with your trade setups and knowing your do's and don'ts. And I'm also a huge advocate for building a list of red flags and knowing what those red flags are. If you see them occur in the markets, because why have you even put that in the bracket of red flags? Because that stung you before in the past. If you haven't learned from that, then you're simply going to be on this Ferris wheel of just hope, and hope won't get you very far in trading. You know, even it's also a principle in faith. They say what? They say the believer doesn't get bit by the same lizard hole twice. So if you've now been bit, i.e. your stop loss has got hit due to this specific reason, and you've written that down in your list of red flags, and you see the same thing occurring, you see price pulling into that same zone that you know is a nonsense zone, but you're still entering because you just want to trade today, then reality is, what are you doing? You're just on this Ferris wheel of hope, and hope does not pay. But when it comes to exits, I'll be honest, I have a different approach for exits. Usually I have my protocol that I want to thank you for, brother. It's absolutely
Wait, what happened?
Helped me so much. No, when we were speaking last time,
Yeah.
last time we was in Dubai and we were speaking, I was just speaking to you about, profit taking system, so on and so forth. Because I used to take profit at 1 to 5, and you told me, try a 1 to 3 and let the rest run. And I tried a 1 to 3 and let the rest run, and it's been working out a lot more. So I want to give you thanks publicly for that, bro. Waqar, like, you've genuinely helped me a lot, man. And hats off to you always, bro.
My guy.
I always told you, you're my Umar Ashraf. I got love for Umar as well, but you're my Umar Ashraf.
My man.
My guy. Yeah.
Okay, so to actually reflect on that, profit-taking systems, it's important. And
Yes.
it's something overlooked because people are just so thankful, like, oh, I'm in the trade, I'm up, that they just then fudge up the exit. But the exit is just as important as the entry. And that pivot that I had, that also you've embodied, is we all used to just take profit on levels that we were taught about. Okay, new lower low, okay, liquidity pool, okay, trend line, all of these things. But that is kind of like fluctuating. How far is that next liquidity pool? Sometimes it might be 20 pips, sometimes it's 40 pips. So you're always going to have sporadic P&L, and then you might also get impatient, and then, there's a new equal lows, double bottom formed on M1. Let me make that one. So you're subject to all these kind of opinions, and then you're subject to all these random zones, and then your emotions. So it's very common for people to mess up the exit, and therefore it becomes a problem. But I think it's more important is static levels, because just like you have your static win rate, you have your risk reward targets, you have all of these KPIs that we can factor in. I think we should also factor in the exit points. And the reason we utilize that 1 to 3 is because We know a London session for an EU or GU is a volatile moment. It's very normal for GU to move 20 pips in a session. So instead of trying to hold out for 40 pips, 50 pips, 100 pips, we know the session, if we got the direction right, will give us 20. So why not lock in a partial around that area? And let's say the rest of the day market structure was against us. The rest of the day we got it wrong. At least we locked that in, that session volatility. These little wins add up. And you probably faced it too, where at the end of the week, you might have had a bad week because you got everything wrong. But you might still be up that little 1.5, 1.5, 1.5. You might be up 6% at the end of the week and got the market wrong. I think that's important because you can be a bad trader because you got the market wrong, but still made money, which is what counts.
Mountains were made from pebbles. A mountain didn't just land there. There had to be a foundation of small rocks laid upon each other in order for this to become a huge rock. So don't disregard small profits. I might make 18K on a trade, I might reverse hit my stop loss, the next day I might make 50K, the next day I might make 30K, the next day I might lose a significant amount that I'm willing to lose, but I don't disregard days where I might just make 5K or even 3K, you know? I don't disregard it because I understand mountains are made from pebbles, and that's always how I've grown accounts. Checkpoints, understanding that, okay, when this trade does hit TP or when I decide to close this trade, it will be one step closer to my target. And just to touch upon exits, I'm also a huge believer in if you have a certain goal that you want to achieve in real life, and this is so important, guys. When I say real life, I genuinely mean real life because when you're a trader, it's very easy for you to get caught up in this trading world. It's almost like you're wearing a VR headset and you can't see reality because some people are so indulged in trading. They're so addicted to trading, they forget this is a tool that you're using to live a good life. But they're so indulged in trading, people say, yes, man, I caught a 1 to 5 today. Your 1 to 5 made you £20. You made $20 from your 1 to 5. Why are you screaming a 1 to 5? What I mean by that is I'm not disregarding the amount. Of course, I was once there. That's not what I mean. Please don't take this out of context. What I mean is people are in trading to boast about being a good technical analyst and a good executor. They're not in trading to boast about the fact that trading has changed their life. Absolute technical analysis merchants. That's all it is. They just want to please people, validation from a community. That's all they want. They're not actually here to change their life. If they was, why don't you have appetite to put that higher lot size, which is still within a correct risk? Why not? You're scared. Anyways, going back to my point of, I hate this, I can run about it. Going back to my point of real life, if I'm in a situation where, say for example, my current situation, I want to buy a car. I could not care if price is 7 pips away from TP. If I've been given the amount that I want, I'm closing the trade. I don't care. And it's always these newbie traders that will look at you and say, oh, why did he close out early, bro? Why didn't you let it run to TP? You know, why did you not let this trade run till TP? Or even when your stop loss gets hit, they might make a remark. And I'm sure you get this whenever you post a trade, and you always get those 1-2 guys replying saying, EU hit stop loss, bro. I know, because I'm in the trade. You don't have to tell me that EU hit stop loss. I know, I can see, you know? And it's also a situation where, okay, EU might have hit stop loss, but my life is TP. Life is TP for me. Why? Because I value my real life, and I'm actually living a real life as opposed to just thinking about the charts 24/7 like an addict, you know? So having TP targets or having those exits at structural levels, or like you said, equal lows, equal highs, Asia lows, you know, minor levels, different variations of liquidity pools, trend lines, so on and so forth. You can have those, no problem. But if you have a TP target where it aligns with a personal goal of yours, forget trend lines, forget Asia, forget equal highs, equal lows, imbalance, forget every technical thing, close that trade and get what it is that you was going to get, because that was on your list of personal goals. Pay your damn self.
Are Forex signals a reliable way to make money, or is it all a scam?
It's not all a scam, but it's not a reliable way to make money, because again, you're putting your trust in a human being. If this human being, God forbid, dies tomorrow, you are not making profit. If this human being enters a losing streak, you are not making profit. And this human being that's entering that losing streak may have the type of capital that can endure that losing streak, whereas you don't. You just deposit $100 or maybe $500 and your total plays 2 lots because they'll get the broker commission from there. And after that losing streak, what happens? You've lost your funds. They haven't, because they're getting new clients every single day in their signals chat, and everything's sunshine and rainbows for them, but it's thunder and hurricanes for you, you know? And I've seen many times, I know people who have signal groups, and someone might sign up to the signal group, and that specific week they have a losing week. What happens now to the person that signs up on a Monday? Monday, Tuesday, Wednesday, Thursday, Friday. They're getting absolutely obliterated by the losses. Come next Monday, they don't have capital left to trade. So they label it a scam. That's why it's got a very bad rep. But yeah, does it work? It does in winning streaks. What happens in losing streaks?
Yeah, so Forex signals, I always question the intent behind it. Let's not get into like, does it work or not? It's like, why is somebody doing it? A lot of these people, they do it for free, but then make you sign up with a broker. They're getting a kickback. And little do people know, but the more volume you trade with their signals, the more commission they make. And actually, there's also bonuses when you blow the account, they get a further kickback. So that misaligned incentive or objective is an issue, because they want you to lose, and they want you to lose as fast as possible and place as many trades as possible. That misaligned objective is to line their own pocket. That would be a scam area. Another one is like people that charge for a service. Okay, they're charging $50 or $100 a month. Okay, what's the harm in that? It's their time, it's their expertise. But then somebody that is really that profitable, why are they doing it? Okay, is there a greater plan part of it? Are they adding an education on top of it because they want to help people learn and earn? I look into these things. But at the same time, I also did it myself, but I did it for free with no broker sign up. I just did it on Twitter for free for 6 months. And looking back and reflecting on it, I gave 60 plus signals, did 50+% in front of everyone, but not everyone joined from day one. So then there is the reality that somebody joined in my losing period, took 8 losses with me, because I had a period of 8 losers. For me, I cushioned it because at that point we were 50% up already. It was 55% up. So when I was up because of the public documentation, but somebody just followed me that day and then followed the losses, what is their situation? Same goes, there's probably someone out there that was asleep at the right time and maybe missed the notification at the right time and only took my winners. That's how it's going to play out sometimes, where there's going to be people that only take the winners, only take the losses, some people that don't, lose faith too early. So in that sense, it's not a wealth generation approach. I was doing it for public documentation, for that credibility, and to show what's possible. And some people made money, some people got funded and so forth. But I would never encourage it, even despite me doing it. I'd never encourage it as a way for people to, actually make an income. But what I found interesting is certain people took initiative off it. So they said, okay, Waqar's posted 60 of his best trades. Let me print. There was a kid that printed every single one of them out. Sent me a picture on Instagram. He printed every single one out and put notes on it, and then actually marked it up on TradingView and did his whole inspection on it to reverse engineer an approach and learn things from it. I rate that guy. There's other people that just see the notification and scroll. Well, what did they learn? Nothing. What was the objective? Nothing. There's this guy from Morocco called Hamza. He made a 10K payout and he tweeted it, so I retweeted it. Very cool to see. He's a young guy who made 10K payout in Morocco. That's a lot. It's life-changing money at that age for that country. And he was like, I just followed your signals and watched your YouTube videos and made sure I learned from it. So he didn't make the money from the signals, rather what he understood from the signals. So these things are cool to see. But in general, that Forex signal kind of thing that you see online, I would put it more in the scam category, because I've never seen someone around that's been like, yo, I did these signals and now I'm a millionaire. That story is not really out there, and there's a reason for it.
What's your take on people saying there are similarities between how the average retail trader trades versus how banks, institutions trade?
Yeah, so we got to get rid of that buzzword of institutional trading. I think that's more of a marketing play. But it's an interesting experiment or something we should actually consider, which is institutions that have billions of dollars and are trading profitably and have regulations and so forth. They are proven profitable and they do things in a certain way. So then why are we or ICT traders or SMC traders doing something that they don't really believe in? Well, that's where people end up. But I think it's a mistake to say the gold standard is the banks, as in like what the bank's doing is gospel and we should follow that and only that. The reason I say that is because they have to follow regulations. They have to follow compliance. Even just to send an email to their clients, they have to do it in a specific way. Then they have no leverage. Then there's so many other things that we're not in the same domain as them. They've got high frequency trading bots. They've got AI. They've got probably insider information. It's a whole different world. We're just little old us with our little retail account and it's different access, different rules, different, even though we're trading the same assets, everything is different. So I don't think we can compare. I don't think any hedge fund would be wise to put 1% of an account, which might be for them billions of dollars, on a 3-pip stop loss. But I've literally documented dozens of trades, live call outs doing exactly that. is because we're not in the same realm. We're just trading the same thing.
I gave an example the other day and I said something very similar to what you're saying, funny enough. And I said, us and institutional traders, banks, so on and so forth, whatever you want to call it, we're all in the same playing field. We're all in the same ocean. The difference is they are the killer whales, they are the orcas, and we are simply just toads. We are retail traders. No matter what strategy you trade, you are a retail trader compared to these guys. And you have to understand that you are a small fish compared to these.
If we go down the rabbit hole of conspiracy theories, BlackRock and the Federal Reserve and the Matrix, let's say, a lot of people do fall into the belief of the Forex market is heavily manipulated and it's all an enslavement, and that is a matrix in itself. Other people are like, no, just price action, supply and demand, push, pull, all of this. The market is everyone has their free will. What is your thoughts on that? Is the market heavily manipulated and a form of enslavement?
I feel like that's too deep. And the reason why I say I feel like that's too deep, I don't really find myself, Waqar, bro, in my 4 years of trading, I haven't really dived into this whole conspiracy theories of like BlackRock or Rothschild or this is Black Swan events. I don't dive into that stuff. I just mind my technical analysis, and that is it. The most I'll do is I'll read up on a Bloomberg article here and there. I'm signed up to newsletters. One of my guys, Joe, he's very, very, very big on macro, and he sends out newsletters, and he's wrote articles for large institutions, so on and so forth. The most I would do is maybe go on Bloomberg, read a newsletter that I'm signed up to, or check, red folder news coming out on Forex Factory. What do I need to be aware of? I haven't really dived into the world of conspiracy theories and looking. I feel like it just distracts you from actually trading, man. Well, the way I trade anyway. I'm just a technical analysis trader. I just trade technicals. And I'm aware of when red folder news is coming out, and I know if I should avoid it. If my entry is close enough to the time where news is coming out, I'll just simply avoid that trade. But if I'm already in the trade from earlier, I'll let it run, have my protocols in place to make sure I'm safe and secure. But I'm not going to sit here and give you a fancy answer just for a clip. I simply don't look into that stuff, and I'm not interested in that stuff. I just have no care for it, I'll be honest.
So when you pull the curtain back and you actually go down the rabbit hole of the history of money and how it's changed and how it can be printed on demand and who owns that and it's private families, there is a very well-documented rabbit hole there. And it's the reality of the world. And it's good to be aware of, but it's also, we literally can't do anything about it. So it's either be a victim and be upset about it, or just try and navigate it and best find your advantage. When it comes to money, that is an absolute fact. When it comes to these huge, let's say a BlackRock and these huge families that own up basically majority of the world, that is a fact. How BlackRock has majority shareholdings in top companies in the US, that's a fact. But when it comes to the Forex markets, it's a little bit different because there's more going on. Crypto, I'd say, can be heavily manipulated because you literally have whales that can move the market. But when it comes to such a liquid asset like Euro USD, where it's probably trillions per day being transacted, not everyone there is there to make money. Speculators. People are there to just literally trade and utilize the currency. Some people are there to invest. Some people are there to just, hedge. Some people, there's many participants in the Forex market. So I don't think it's like us versus them in the same way. There's probably stuff going on. There's probably great ways that these powerful people are utilizing currency to launder money, introduce new money into the supply. There's probably all of this stuff going on, but the price action we see is a digital footprint of all of that going on. People that are utilizing it for speculation, people that are utilizing it for trade, everything that's going on, the amalgamation of it is price action. So I just say it's factored in, and I follow my principles of price action. Sometimes I get it wrong. I can have my reasons for it being wrong. Maybe it's something that I don't know about, but in general, price is price. Price has a language. Price has its laws. And if you can start to build a strategy around those first principles, the laws of price action, for example, liquidity, supply and demand, these kind of things are not going to go away. But let's say how effective a trend line may be, that has changed. How a support level used to work great, now it doesn't work as great anymore. There are changes in the market, but the facts of the market, which is how the market moves, will never change. So, which is why I always say try and build a strategy around primary drivers as opposed to indicators or a school of thought, an Elliott wave or something, because the market does change, and I'd rather be on the side of primary drivers, not causative strategies. So brokers in general are quite regulated. You have the offshore brokers, which are not regulated, and they give you leverage, with why people use them. But right now, prop firms are the Wild West. They're completely unregulated, and therefore there's a lot of rug pulls and bad things that happen, but also great opportunity. What is your thoughts on the prop firm industry and if regulations should come?
I'm not going to be the Karen and say I believe they should come, so on and so forth. I'll simply say utilize them whilst they're here. and utilize them whilst they're this accessible is mainly what I will say. A lot of people are too caught up in the intricacies of prop firms, when in reality, all they should be doing is focusing on getting a payout. So many people are simply Karens in the trading market. All they want to know is this 100% guaranteed for the next 5 years? Bro, just focus on getting payouts consistently this year. Why are you thinking about the next 5 years? Just do the work, because you haven't got a payout yet. You're focused about the wrong things. Your strategy isn't even in check. So my take on prop firms, I always say utilize them whilst you're here. Regulation, no regulation, until it's black and white and they come out and say that's it, prop firms are banned. Ride the wave, man. Ride the wave. You know, if you invested in Bitcoin how many years ago, you'd be laughing right now, right? Of course, it's a different scenario. But if something is accessible to you in the way it is right now, where you can acquire large amounts of simulated money that you actually get paid out on, do it if you can. Because if you can't, then your Twitter fingers are just speaking about the wrong things. You should be using those fingers to practice, trade, learn, get that market experience, and actually be involved rather than just being a commentator, being a Martin Tyler or Alan Smith in the trading market. We don't need commentators. We need doers, bro. Start making money, because if you're really about that life, you'll be in the markets making money. Stop talking, make money.
So regulation, there's two sides of it. One side is which is in the favor of the user, traders, and that seems like a great thing, so we should invite it. But at the same time, there is also more to it, because they also cap leverage and they do a lot of things that are not in favor of the trader. That can also be the matrix. They want you to control you. But the reality is, when anything is seeming like gambling, or if anything seems like a version of a casino, which prop firms can be, and anything that has supernormal profits, and these prop firms make a huge amount of profit, regulators naturally come looking. And when that happens, there is uncertainty. But what I want to see as interesting is, it's not going to make your life better or worse. Let's say when it happens, we can't do much about it. But right now in a very competitive market with so many prop firms, it's a law of economics that when there's a lot of companies, when there's a lot of competition, it always favors the consumer. Because if there's a monopoly, what they say goes and what their rules are goes and so forth. So we want competition. We want as many prop firms. However, it's a catch-22, because when there's a lot of prop firms, each one has less market share, each one makes less profit, and specifically in this case, they rely on profits to pay the payouts. So you also don't want too many participants. So that can be like, oh man, what am I going to do? Regulations are coming, too many prop firms are in the market. The laws of a free market will always win, where it's a price war, and that's good for the consumer. There's a favorable conditions war, and that's favorable for the consumer. Then the pendulum will swing too much in one way. Now it's too cheap. Now the conditions are too good. And now prop firm traders are making too much money and they go bust. The prop firms go bust. And then it'll come back to the normal. And then maybe swing the other way. So every economy, every business, every industry has these pendulums. So just know where you are. Know that it won't always be like it is today. Maybe it'll get better. Maybe it'll get worse. But as you said, you just got to utilize it for what it is right now and make as much money as you can right now. And if in 2 years it's better, good for you. If in 2 years it's worse, there'll be ways to pivot. As long as you have that core skill set, you'll always be able to make money. But right now, prop firms are good. Prop firms are easier. The easiest as they've ever been. Go for the reliable ones, make as much money as you can and liberate yourself.
My opinion is as well, just to add to that, it's such a profitable business model. Someone of authority, I believe, will make a way to make it work, but they won't allow everybody to have a slice of the pie.